Mr. President.
Senator from Minnesota.
Thank you, Mr. President. I rise to speak about an issue of great importance, the foreclosure crisis, and the fears and frustrations of American families who are at risk of losing their homes. Wherever I go in Minnesota, people tell me horror stories about losing their homes to foreclosure. I'm sure the same is true of the presiding officer when he goes home to Virginia. The foreclosure crisis strikes at the heart of the American dream, threatening Americans' life savings, their family lives, and what they've achieved. The President took a big step in addressing this crisis when he created the HAMP program, which encourages mortgage servicers to modify home loans to help people avoid foreclosure. But it's often difficult to implement complex programs, and HAMP is no exception. When HAMP works, it can be great. It can literally save people's homes. But too often, homeowners who try to use the HAMP program find themselves involved in a bureaucratic process that is riddled with errors. And these are errors that have serious consequences for people's lives. Take a woman named Takora, who's a homeowner from South Minneapolis. Incidentally, she's someone who actually would have been helped by a Consumer Financial Protection Bureau. Several years ago, she bought a house with an option arm, or adjustable rate mortgage, where the mortgage payments increased dramatically over the years. Someone should have told her that the teaser rate her lender offered her might be misleading. Someone should have told her she might not be able to afford her mortgage payments in the future, but no one did. A few years ago, Takora's payments went up and she fell behind on her mortgage. She entered the HAMP program hoping to save her home, but 7 months later was told by her mortgage servicer that her file was closed because she had, quote, declined a final modification of her mortgage. Here's the only problem. She hadn't. And her mortgage servicer had no record of a conversation or correspondence with her. They had simply marked the file as closed. Takora is lucky enough to be working with a wonderful nonprofit in Minneapolis, Twin Cities Habitat for Humanity, and they are helping her to fight this mistake. But they've been working on this since March, and the government resources that are available just aren't very helpful. In the meantime, Takora is constantly worried that she may lose her home because her mortgage servicer made a mistake. Or take Barbara, a homeowner from Minneapolis who fell behind on her mortgage payments because her husband was laid off and her son got cancer, racking up huge medical bills. Talk about someone who might lose their home through no fault of her own. Her mortgage servicer claimed she wasn't eligible for a final mortgage modification using incorrect information about her financial situation. When she pointed out there was a problem, her servicer told her there was nothing they could do because, quote, once you've been denied for HAMP, you can't be eligible again. Barbara is fighting this, but someone from the government really should have her back. Yesterday, I filed an amendment with Senator Snowe and 7 other colleagues to fix the HAMP appeals process. People at risk of losing their homes are going through enough already. They shouldn't be stuck fighting over mistakes with their servicers without a guarantee that someone will be on their side. Our amendment would create an Office of the Homeowner Advocate, modeled after the very successful Office of the Taxpayer Advocate within the IRS. The Advocate's Office would be an independent unit within Treasury, charged with helping homeowners, their housing lawyers, and their housing counselors to resolve problems with the HAMP program. The office would be temporary, lasting only as long as the HAMP program does. But while it exists, it would have a lot of authority to help homeowners and families around the country. For the first time, homeowners would be able to call an office in the government and know that someone with the authority to fix the problem is actually fighting for them. Staff of this new advocate's office would be able to make sure that servicers obey the rules of the HAMP program or risk suffering the consequences. Perhaps more importantly, opening a case where the advocate's office would delay a servicer's ability to sell a person's house, giving the office time to resolve the problem before it's too late. The director of the advocate's office would be someone who can truly fight for the rights of homeowners. He or she must have a background as an advocate for homeowners and cannot have worked for either a mortgage servicer or the Treasury Department in the last 4 years. The director will also be able to help those of us in Congress understand what's going on in HAMP. Because the office can collect data about the kinds of complaints and appeals that come in, the director will be in a good place to know what kinds of changes, both administrative and legislative, that need to be made to the program, and can describe them to the Treasury Department and to Congress. Once a year, the director will issue a formal report laying out in detail all the problems that people have had with HAMP and how they can be resolved and the ways such problems could be prevented or better resolved in the future. I know that many of my colleagues on both sides of the aisle are understandably worried about the deficit, so I want to be clear about one thing. This amendment includes no new appropriations. The advocate's office will be funded with existing money that is set aside for HAMP administrative costs. I'm pleased to say that our amendment is supported by the Treasury Department itself. In fact, just yesterday, it was featured on the White House's blog as one of the good guys. 10 simple, straightforward amendments that would strengthen the already good Wall Street reform bill. It's a good guy, this thing. My amendment is also supported by a large number of groups, including Americans for Financial Reform, Center for Responsible Lending, National Consumer Law Center, the Leadership Conference on Civil and Human Rights, Consumers Union, Consumer Federation of America, the Service Employees International Union, and National Council of La Raza. I'm particularly pleased to say that the amendment is also supported by several of the most important housing groups in my home state of Minnesota. The idea behind the advocate's office is simple, but the impact could be huge for all the people that we are all here to represent. Please join me in helping to ensure that HAMP actually works for families around the country. We owe it to Cora and to Barbara and to all the working families in your states and around the country. I'd now like to shift gears and talk briefly about the other amendment I'm proposing to reform, this one to reform the credit rating system, the credit rating industry. This industry is fraught with bad practices and perverse incentives. These incentives produced inflated ratings, which resulted in dangerous junk bonds getting AAA ratings and thus being eligible for public pension funds. In fact, the court just ruled last week that a suit on this issue brought by CalPERS, the California Public Employee Pension System, can now move forward. CalPERS represents nearly 1.5 million California public employees, including thousands of teachers and public safety officers. CalPERS has brought suit against the 3 biggest credit rating agencies, Moody's, Standard & Poor's, and Fitch. CalPERS states that the big 3 provided, quote, wildly inaccurate and unreasonably high, unquote, ratings to products that ended up in their investment fund. When these structured finance products, including securitized subprime mortgages, when they tanked, CalPERS fund, a pension fund, lost almost $1 billion. That's a loss of $1 billion for California teachers, police officers, firefighters, and public servants from their health benefits and from their retirement plans. CalPERS is not the only group to take action. Private suits have been filed in New York, and the attorneys general of Connecticut and Ohio have brought suit against the rating agencies on behalf of the people of their state. Ohio Attorney General Richard Cordray filed a suit last fall on behalf of 5 Ohio public employee retirement and pension funds. Cordray said, and I quote, "The rating agencies assured our employee public pension funds that many of these mortgage-backed securities had the highest ratings and the lowest risk. But they sold their professional objectivity and integrity to the highest bidder. The rating agency's total disregard for the life's work of ordinary Ohioans caused the collapse of our housing and credit markets and is at the heart of what's wrong with Wall Street today. The inflated ratings cost middle-class families in Ohio nearly $500 million in retirement funds. But this problem is not limited to California and Ohio and New York. This affected my home state of Minnesota. This affected the president's home state of Virginia. It affected every state in this nation. By now, I hope you've heard the details of my amendment to reform the credit rating system. It would limit the pay-to-play model currently used in the credit rating industry. The amendment calls for an independent board to develop an assignment system to match the issuers of complex financial of complex financial products with a qualified rating agency to provide the product's initial rating. This system would apply only to initial ratings. Issuers could seek a second or third rating from whichever credit rater they prefer. But the initial rating would put a check on any subsequent rater, which would be disinclined to provide an inflated pie-in-the-sky rating to a junk product. By providing for an assignment process, the conflicts of interest driving the system will be eliminated, and the assignment process will allow smaller rating agencies that are performing well to get more business, and rating agencies performing poorly to get less. This will hold rating agencies accountable for their work. It will incentivize accuracy and increase competition. I know many of you agree with me, and the list of co-sponsors on this amendment is growing. Most recently, I was particularly pleased to have Senator Wicker join our effort. And of course, I'm deeply grateful for the leadership of Senators Schumer and Nelson and the support of Senators Whitehouse, Brown, Murray, Bingaman, Berkeley, Lautenberg, Shaheen, and Casey. Restoring integrity to the credit rating system will provide real protection for working Americans. Working people like Takora and Barbara are still reeling from the effects of this recession. Our unemployment rate still hangs near 10%. Working Americans together have lost nearly $4 trillion in the value of their homes and about $3 trillion in loss of retirement savings during this economic crisis. The Wall Street reform bill before us goes a long way to prevent this from ever happening again. But there are a few places where it can be improved. I hope that my amendment creating the Office of the Homeowner Advocate will help struggling Americans keep their homes. And my amendment calling for an overhaul of the credit rating agency industry will protect millions of Americans from unprecedented losses in their supposedly safe retirement investments. I ask my colleagues for their support for both of these critical amendments. Thank you, Mr. President, and I yield the floor.